Welcome to Thoughts on the Market. I'm Andrew Sheets, Chief Cross-Asset Strategist for Morgan Stanley. Along with my colleagues bringing you a variety of perspectives, I'll be talking about trends across the global investment landscape and how we put those ideas together. It's Thursday, September 2nd at 5 p.m. in London. As summer transitions to fall, investors will return to a host of important market events over September and October. Here are a few of the things that we think will be important for markets over the next 2 months. The first event, we hope, is a positive. My colleague Matthew Harrison and our biotechnology team think that U.S. Delta cases are in the process of peaking in the U.S., and that could provide some boost to sentiment, which has recently fallen significantly among the consumer sector. But the bigger event comes later. That's the Fed, which meets on September 22nd and will release an updated Summary of Economic Projections, or SEP. What's key about these projections are the so-called dots, which reflect when the Federal Reserve estimates where it thinks interest rate policy might be over the coming years. We think the Fed might indicate a faster pace of rate hikes once they start than the market's expecting. One reason why Morgan Stanley's interest rate strategists think that interest rates will rise between now and the end of the year. Congress will also be busy in September and October. There's the U.S. infrastructure package, or really two packages, the bipartisan infrastructure framework and the reconciliation bill. In the view of my colleague Michael Zezas and our U.S. public policy team, this is likely to be an all-or-nothing legislative event, i.e. both bills will pass, representing a quite large fiscal package, or neither will. And that type of large binary event can have a big impact on markets. There's also the debt ceiling. The U.S. needs to raise its debt ceiling sometime, we think, between September and October. And while we think that will get resolved, it represents another somewhat binary event for markets that, if we think back to 2011, was able to create some volatility. And finally, there's earnings. September is often a period where companies come out and somewhat lower their guidance, a reason why September tends to be somewhat seasonally weaker than other months. But as my colleague Michael Wilson, Morgan Stanley's chief U.S. equity strategist, has noted, earnings estimates for the S&P 500 have rebounded unusually fast following the recent recession. While that's been good news for the equity market, high expectations also raise the bar for what companies need to deliver, and that creates some risks. Mike is cautious about the third quarter earnings season, in part because of how high these estimates already are. As summer transitions to fall, the weather cools, and the leaves change color, investors will be coming back to a host of important market events over the next 2 months. We'll make sure that we keep you up to date on our latest views on how these events and others impact our thoughts on the market. Thanks for listening. Subscribe to Thoughts on the Market on Apple Podcasts or wherever you listen, and leave us a review. We'd love to hear from you.
The preceding content is informational only and based on information available when created. It is not an offer or a solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.